Good morning, everybody, and welcome to this SmartCharts European session. Hope you're all well. So let's dive into the market, get a quick update on what's coming up from an economic event perspective, and we'll dive into SmartCharts and have a look at any potential trading opportunities. Now, considering it's the new year and a new week of the first month of the new year as well, it's pretty light on the economic event calendar, but there are a few high impact news announcements to keep an eye out on today and tomorrow. And really today, the only high impact news announcement event on the calendar is the US unemployment claims report at 1:30 p.m. GMT. And this is a report that's released from the Department of Labor in the United States. It measures the number of individuals who filed for unemployment insurance for the first time. And the number of unemployed people in an economy is an important signal of overall economic health, because the labor market is correlated with consumer spending. Okay, if there are more unemployed people in the economy, then they're probably not going to be spending a lot in the economy, maybe claiming unemployment related benefits. So it drains the economy. So it's a leading indicator of overall economic health. A forecast is for 222,000 individuals to be filed for unemployment insurance for the first time. So the key here is that, look, when we look at these news announcements, we're not trying to predict, did the economists and analysts get that number correct? How is the market going to respond? Is it going to go up? Is it going to go down? We look at these news announcements for several reasons. The first reason, number one, is always risk management. Cannot stress how important risk management is going to be. When it comes to trading the financial markets, it's all about risk management, because we are risking money to make money, right? It involves wins, it involves losses. And what we're trying to do is trying to find an edge in the market from the clues that the market presents to us, and turn that edge over as many times as possible to get the statistical probabilities working in our favor. Okay, so what can happen is when you are trading like a big theme, the market is quite correlated, because especially when you're trading the currency market, you're trading one currency versus another currency. So if everyone was piling into the US dollar, for example, then you'll see the US dollar might be rallying across all of the different currency pairs. So you might find yourself having a lot of concentrated positions on that one currency. So you've got to be a little bit careful when it comes into high impact news announcements, because if you have several US dollar trades on in front of that news announcement, and maybe there's a big surprise and the market goes the other way and people dump their positions, then you can get hit on all of your positions, and you'll take a much bigger loss in a much more concentrated period of time, which then of course affects people mentally. Okay, and that's very important. Risk management is about protecting account capital and mental capital as well. Also, we look for any surprises, so that is always the key. Most things are already priced in. Okay, so from your day one Learn Forex workshop on your trader certification program, we go through how the market actually works, how the flows are created by the larger institutional speculators, and how it is constructed on an institutional level with your analysts, and then your traders and your risk managers and in-house psychologists. So we know everything is already priced into the market. So what we look for is any surprises, okay? Because if the market gets surprised, so maybe the number is a lot bigger than people are expecting, or maybe a lot smaller than people are expecting, then that may cause people to readjust their positions based on this new surprise number that has been released. And that can cause a lot of volatility in the market, which is sometimes tradable and can give us some good clues of what could potentially happen next. So we'll look for those big surprises and see if there's any clues around trading those bigger moves. And the third thing that we look for is just a confirmation, okay? For you long-term traders, if you're holding longer-term trades, then it can be quite useful to track economic data, because then that can tell you, actually, look, all this economic data, yeah, it's pretty strong recently. Okay, if you look at all the economic data, it's pretty strong. That may sustain a longer term trend in that currency that you're trading on. Okay, or if the economic data is consistently very, very weak, then that may sustain a long-term trend to the downside. So when you get that technical and fundamental narrative lining up, it can sometimes lead to higher probability trading opportunities. And actually, one of the big big fundamental narratives that we have been trading in the tail end of last year, really since the beginning of November, the US presidential election, and all throughout December, has been a rally in the US dollar. The US dollar has been strengthening, and that has been a big theme that has developed in the market that we have been trading. So let's actually have a look at how this impacts the technical picture, and let's dive into SmartCharts and have a look at any potential trading setups. Okay, so if we look at the tools tab here and look at the currency strength index first of all, just gives us a nice quick broad overview of what's happening in the currency market. We can see right now that actually it's going to be your gold, yen, Bitcoin and the US dollar that are particularly strong, okay, and we can see the euro, Kiwi, Swiss franc, British pound particularly weak. All right, so this is quite useful because again, if you have been trading over the past several months, you probably have been noticing the US dollar has actually been green for most of the most of the time over the past few months, because the US dollar has actually been very strong. We've had big trends in the US dollar to the upside, so this can just give us a little bit more of a confirmation of kind of what we're seeing from a technical side, and it can help you to understand a little bit more about where the flows are. And really what you want to be doing, if you're like a short-term trader, so if you're trading like the short-term, fast time frame, low time frame strategies, so in your trend certification workshop, things like your pip runner, for example, your 15-minute chart, maybe your 1 hour chart T-wave, okay, then really what you want to be doing is pairing up strong and weak currency pairs, because we know a currency pair, it acts like a seesaw, okay, when one currency is rising, the other currency is weakening, and vice versa. So ideally you want to be buying the strong currencies and then selling the weak currencies, okay. So in this instance, if you're a short-term trader, you really want to be pairing up the strong and weak currencies. And if you're a bit more of a medium to longer-term trader, and you're looking for more like trend reversals and things like that, so from your trade certification workshop, things like your volatile reversal strategy, your trend reversal range strategy, then you might be looking at this and saying, okay, well look, this currency has been really strong for some time, this currency has been really weak for some time, so maybe there's going to be some profit taken at some point. So if we're coming in some big levels in the market, then that can help you to identify them and maybe look for some reversal based opportunities, okay. And this is actually why if you go to your charts tab, and if you go to the 180 phase changer strategy on the 4-hour chart here on the right hand side, the US dollar against the Swiss franc currency pair has been highlighted by the London and Sydney trading floors. So there's a few things going on here. So first of all, your phase changer strategy, a strategy I absolutely love, one of the strategies that we go through on your trade certification workshop, and it helps to identify and trade any momentum trends developing in the market, okay. So there's different types of trends that develop in the market, and one of them is a momentum based trend, and the phase changer helps you to identify and trade those, okay. And it's a strategy which utilizes moving averages, the yellow line and the blue line on the chart, and also relative price patterns like ring highs and ring lows. Now I like to use moving averages, not everyone does, it's completely fine, okay. There's many different technical tools out there that you can use, and people gel with different tools, but I like to use moving averages in all the different types of trend strategies that I trade with inside of SmartCharts. And in particular, I like to trade when I'm in the moving average zone. So what is the moving average zone? Well, basically your moving average zone is being on the yellow line, on the blue line, anywhere in between that is what we call the moving average zone. Why do I like to trade in the zone? Because it just gives me a focus, because I can say, well look, in the past, every time we come to the zone, some buyers have turned up and driven the market higher. So well, maybe if there's still buyers around, they're going to turn up here again today. It just gives me a focus, okay. So if buyers have been turning up here before in an uptrend in the zone, it gives me a focus to say, okay, maybe more buyers can turn up here again today, right? Or if price is breaking through the zone like it's not even there, then that's a warning sign to say, okay, maybe there's not really any buyers or sellers around in the market, they're just breaking through the moving averages, so I don't know where they're turning up, so I should stay out of the market, okay? So it just gives me a quick, easy focus on what's happening. So we can see here that, look, on many occasions we've had a lot of buyers turning up in the moving average zone. I'm sure you may have been trading this over the past few months, over your Christmas period, for those of you who have been trading. But we also like to look for other things as well. And what we want to do is really line up the power of what SmartCharts is doing, okay, and the things that it's looking for, using algorithmic technology, and just lining that up with a bit of human insight, pattern recognition. Okay, so for me, I like to look for other clues the market is presenting to us, and there's a few things going on here. So first of all, we can actually see we have what we call a trend line. We have an angle of price where buyers have been turning up before, so maybe buyers might decide to turn up here again on this angle of price. Okay, so we'd like to look for other levels of support and resistance. It could be trend lines, could be horizontal support and resistance levels. You might use other indicators. So for example, some of the other traders inside of SmartCharts, like Emmanuel, who you'll meet, a master trader, phenomenal trader. He loves to use pivot points. Sukhdev, who's a fast time frame trader, when you trade live with him, he loves to use Fibonacci retracement levels. So there's different types of support and resistance tools available, but we have this trend line here, an angle of price where buyers have actually been turning up before, which you might have already been using to trade the previous setups as well. Okay, so what we have here is a confluence of support levels where buyers may decide to turn up because they have been turning up here before. Okay, obviously no one can predict the future, no one knows what's going to happen next. Okay, all we can do is look for the technical tools the market presents to us and just be consistent in turning over that technical edge. Okay, and so on top of helping to identify potential trading opportunities, and remember, if you're not familiar with how SmartCharts is helping you, make sure you are utilizing all of the materials available to you, because you have a ton of materials available to you to help you in your trading. So you have your e-learning portal section of SmartCharts here with all your e-learning materials. You have your live events tab here, so make sure you're attending all your live online classes, webinars, workshops, boot camps, all those things. Make sure you're attending all your coaching sessions as well, okay, where you're speaking live directly with a trader to help you with your trading performance. So you have lots of different tools there. Make sure you're utilizing all of them. But SmartCharts will also help the risk management side, which is really the most important. Okay, if we click the up arrow here, it will populate an entry price at the blue dot, stop loss at the red dot, target the green dot, which can all be adjusted according to your own user preferences. And it will do all the risk management calculations for you automatically, and then we can just set an expiry here at the bottom. I like to set a current bar close expiry on this particular strategy for this particular time frame, and then decline or accept the trade here at the bottom. And basically what that means is, if buyers do not turn up and continue to move higher and get to this entry price level in this zone where buyers have been turning up here before, by the time this current 4-hour bar closes, this pending trade will expire. Didn't win, didn't lose, didn't cost anything. But if they do decide to turn up, that will trigger into a live open trade. Then either it goes to the target level and it's a winning trade, or it goes to the stop loss level and it's a losing trade. Okay. The key here though is really to make sure you're keeping the risk low and make sure you're able to deal with the random distributions of wins and losses that develop throughout the season. Okay, so there's plenty of other different themes and opportunities developing in the market, so make sure you're tuning into all the other live training webinars throughout today, help you to identify and participate in them. But for me, that's it. I'm going to wish you all the best for your trading. I'll speak to you next time.